Are you ready to learn a strategy that will allow you to make money without breaking a sweat? Don't worry, you don't need to be a math genius to understand it. By when the price breaks a downtrend line and all moving averages used in the Moving Average Explorer indicator change to green or are in green. Sell when the price breaks an uptrend line and all moving averages used in the indicator change to red or are in red. This trading strategy uses a set of indicators to identify market entry points quickly and effectively. By using these signals, we can confirm the existence of a trend and look for positions in the market. Join our community by subscribing and liking our videos. Click on the subscription link and don't miss any of our updates. The indicator uses a combination of moving averages of different lengths to identify the direction of the price trend. By using multiple moving averages, the indicator can provide a clear signal of the trend direction and help traders identify trading opportunities. The indicator allows users to customize the lengths of the moving averages used in the calculation. This means that traders can adjust the indicator to suit their trading style and market conditions. The indicator also includes a table of values showing the moving averages used in the calculation, together with their current values. To install the Moving Average Toolkit tool in TradingView, search for the indicator in the list of indicators. Type Moving Average Toolkit in the search box, select it, and you will see it on the chart. We will also use a second indicator called Trendline Pivots. This indicator will help us to identify trend breaks and identify the direction of the price. Let's see how to use these combined indicators. The first thing you should do is look at the moving averages plotted by the indicator to determine the direction of the trend. If the moving averages are rising, it indicates an uptrend. If they are falling, it indicates a downtrend. And if they are flat, it indicates a sideways trend. It is good practice not to trade when the moving averages are sideways, as this indicates that the market is in a range or consolidation, and there may be a lack of clear direction. Wait for the price to break a support or resistance level identified by the Trendline Pivots indicator. If the trend is up and the price breaks a resistance level indicated by a green the 10th, consider opening a long position. If the trend is downward and the price breaks a support level indicated by a red cross, consider opening a short position. It is recommended that, when making a trading decision, the risk-reward ratio should be at least 2-to-1, which means that the expected potential profit of the operation should be at least 2 times greater than the potential risk. For example, if you place a stop loss at a level that would cause you to lose $100, your take profit target should be at least $200. By setting a profit target that is at least twice the risk you are taking, you ensure that your winning trades will offset your losses and that you can make a profit over the long term. Let's look at another example in this bullish scenario. Imagine that you have been closely following a specific market and have performed a technical analysis on the chart. You have identified a significant resistance line drawn by the indicator, which acts as a ceiling for the price. The price finally manages to break this resistance line, indicating a possible bullish momentum. We note that all moving averages have changed to a green color, indicating an uptrend. Considering the break of the resistance line and the confirmation of the green moving averages, this could be a signal to consider a buy trade. We can apply the inverse rules in a similar way to take advantage of selling opportunities after the break of a support level in a downtrend. Thank you for joining us in this video. If you have any additional questions, feel free to leave them in the comments. Don't forget to subscribe. See you next time and have a great day.